Hi, everyone. Welcome, and thank you so much for joining us today. We are excited to have you. My name is Brit. I am the Director of Business Development at Ximplifi, and today we are going to be discussing 1099 tips for short-term rental managers. With deadlines right around the corner, we are getting a lot of questions about this topic, and so we thought a webinar would be helpful. So today, Gordon, you can go to the next slide. You will be hearing from Jesse Arrett, the former CEO and founder of Ximplifi, and also a co-founder of VRPlatform, as well as Gordon.walsh, the 1099 product solution consultant with Avalara, and Judi.gee, a sales executive with Avalara MyLodgeTax. Next slide. Before we get started, a couple quick housekeeping items. You can make sure to just go ahead and submit questions using the Q&A button. We'll try to get to those as we go throughout the presentation, but we'll also save some time at the end for questions. And this will be recorded. It is being recorded now and will be shared with all attendees following the event. All righty, a quick look at the agenda. We're going to start off with brief background information about the companies that are hosting today's webinar. We'll then move into 1099 responsibilities that property managers have, discuss some of the common filing mistakes that we typically see to help you avoid them, give you a step-by-step process to follow, and walk through some tips to surviving 2025 and beyond. And then lastly, some Q&A. All right, so I'll start off real quick with some background about Ximplifi. Ximplifi is an accounting firm that specializes in vacation rental accounting. We offer 3 different levels of accounting services, and 1099 support can be included with any of those options. Happy to discuss anything further. At the end, we'll show some contact information. And Jesse, I'll flip it over to you to introduce VRPlatform.
Yeah, great. Thanks, Britt. So, yeah, my name is Jesse, founder of Ximplifi, and then also co-founder of VRPlatform. So, VRPlatform is offers really multiple solutions to help all those pain points when it comes to automating accounting for short-term rentals, both integrations from your PMS, Airbnb, Stripe, and other payment gateways, to accounting software like QuickBooks, Xero, or Sage Intacct, as well as we're launching our brand new product come January, VR Trust, which is an all-in-one trust accounting solution specifically for the short-term rental industry. So basically plugging into your PMS, Stripe, Airbnb, similar to how our integrations work, but then having a full all-in-one, full functioning general ledger to reconcile all those various transactions, reporting to owners and reporting your own management revenue as the property management company. So that is VRPlatform. And then I think we're probably going to throw it over to you, Gordon, to explain Avalara.
Okay, I'm going to take over just for a couple of slides. I'm Judi.gee, and I'm with Avalara, and I've been working on the MyLodgeTax team as a sales executive for almost 5 years. And for 2 of those years, we've been successfully partnering with Ximplifi. And I think we have many shared customers, and I think some of you are here today. So for those of you who are not familiar with Avalara, we're a global automated sales compliance company, and we provide platforms and offerings around sales and use tax and many other taxes as well. So today, we're going to focus on 1099s and W-9s, and Gordon's going to present that. But first, I'd like to introduce you to our MyLodgeTax platform and services. MyLodgeTax is a platform for property managers to help with tax compliance for short-term property rentals. Tax compliance in the short-term rental industry is very complex, and our goal is to simplify tax compliance for our property managers to free up their time and resources so they can focus on other aspects of their business. Okay, let's go to the next slide. And And just a brief introduction, when we talk about our MyLodgeTax Pro platform, we talk about it in terms of a five-step process. So the first step we do is to research the tax rates and the obligations and the rules for every property that our property managers add to their MyLodgeTax account. And this is done within 2 days of adding the property to their accounts, so they can ensure the correct tax rates are being collected from their guests. Then next, we research and apply for tax accounts and registrations that are required, quite often at a state level, a county level, or a city level. And we work with over 4,000 jurisdictions, I think it is. So the rules vary. So we work closely with our property managers to ensure that the registrations and all the tax accounts are completed. And then the third step is to help our property managers ensure accurate collection and calculation of taxes and fees. We have a feature called Marketplace where we are tracking the taxes being paid by marketplaces like Airbnb so that we only remit the taxes that they are not remitting. And many of our property managers work with different property management platforms. So we want to ensure that they're collecting the correct tax rates on their property management systems. And then the core of our business is to file and remit the taxes. And we ensure that we are keeping our property managers tax compliance and remitting taxes in a timely manner, depending on the jurisdiction. And then lastly, we have a support team that helps our property managers with any issues or questions that may come up. And one of the big things we do is help manage notifications that may be received by our property managers or by their clients. So that's an overview of MyLodgeTax. And now I'm going to turn it over to Gordon so he can get on with our presentation.
Well, thank you. Great introductions across the board here. Hopefully, everybody in the session here today is starting to see how all of these pieces can kind of come together and help your business. So our focus here today is really, as we're coming down to the crunch here of the end of 2024, that means January is around the corner, and not only does that mean New Year's resolutions, but it also means 1099 season. The month of January, typically that time of year. So everything we're going to cover here for the next little bit is going to be really revolving around that and making sure that you are in a good spot to be able to effectively and compliantly issue those 1099s. So we'll start with the basics here. What is a W-9? What is a 1099, right? Well, a W-9 is strictly an information request form. It is the form, the IRS document that a business or would give to a recipient, an individual contractor, a vendor, somebody who we have paid as a non-employee throughout the year. It is the form we collect that gives us their personal information so that we can actually file a 1099 on their behalf. It includes their legal name, their DBA, their tax ID number, their address, and sometimes, most importantly, their tax classification, because only certain types of entities are going to receive a 1099 at year end. So we want to make sure we have that, and this is the official document that tells us that. So anytime we work with somebody that's non-employee that we're going to be having any type of income or transactions exchanging hands, we want to collect a W-9 from them throughout the year. Now, come January, how do we report that information of how much we paid to the IRS? Well, that's on a Form 1099. That Form 1099 is a once-a-year form. Again, typically can't really start working on it until January 1st because you need to know the totals that you paid them throughout the year. But it is due sometime in the first quarter, depending on the form type, but it does need to be completed to the point where you can send off a copy to the recipient by January 31st. And so this is that form that says, here's how much. Hey, IRS, grab your tax money from this individual, and I'm telling you as the business how much we paid them or the money that exchanged hands. They're going to follow up with you because I sent them a copy as well. On you being able to collect that tax money from them. So really a 1099 is a W-9's information plus the number, how much money was transacted between myself or my company and that recipient. The W-9, again, just kind of the way that we collect this information so that we can issue the 1099. Okay, so very, very important forms. W-9 kind of as a year-round form, something that we want to do when we onboard. 1099 being something that really just comes up at the end of the year. And now let's kind of switch it. Jesse, I'll pull you into this conversation here about what is it, how do these directly connect to property managers? What are they responsible for?
Yeah, so to apply the types of, I guess, activities that a property manager is doing throughout the month that is going to some way affect the 1099s that they report. It's going to be, hey, you're collecting fees from the guest. Those fees are obviously rent, cleaning, pet fees, as well as sales taxes, et cetera. You're collecting that both as money that you're going to keep as the management company. Also, a lot of that money is going to be passed through to your homeowners that you're managing properties for, but then also, you're paying vendors. Those vendors in property management environment typically are going to be cleaners if they're not employees. So if they're being paid on a contractor basis, and or maintenance folks, those are, landscapers, et cetera. Any of those people that are providing services typically to you as as the management company, or, on behalf of you to the owners, those are the people that you are paying that we need to make sure that we're collecting those W-9s from, as well as being prepared to issue 1099s at the end of the year. So we're collecting those W-9s throughout the year. Hopefully, as you're onboarding new homeowners or before you're paying new vendors, you're collecting those W-9s. Certainly, you're preparing owner statements, paying owners, again, paying vendors. The data will get in a little bit more of what on the owner statement needs to be reported to on the 1099. There's probably a little bit of confusion around that, but we'll talk about that later. We'll also talk about the different 1099 forms. So typically an owner is going to get one form, a contractor is going to get a different one. So the MISC goes to the owner, the NEC goes to the vendor. I know this is confusing, but that's why we're doing the webinar. But we'll talk about those different ones here in a bit. Then you're also paying yourself as the management company. Usually that's not going to come into effect the W-9s and or the 1099s. But at the end of the year, we're coming up and we'll talk about the filing deadlines, which is coming right around the corner. You're filing those 1099s and obviously filing your own taxes at the end of the year. So hopefully that gives you an idea of what, as a property manager, you're responsible for, the activities that are feeding into this W-9 and collection and 1099 filing.
So really, Jesse, sounds like two main, in the world of property management, two main big use cases, right? W-9s from homeowners as we have new homeowners come into our portfolio, as well as any vendors or contractors such as cleaners or maintenance or things like that. Those are kind of our categories, and then that separates out to the 1099 miscellaneous for homeowners, 1099 NEC for contractors.
That's exactly.
Awesome. Well, let's keep talking about some of the common mistakes that come up and some of the things that if we can be proactive on, we can keep ahead of, we can save ourselves a good amount of pain financially and time as well. So a couple things that we hear often across all of the board here. Hey, I only collect W-9s from people that I know I'm going to have to issue a 1099 to. Can be costly. The IRS, not just the IRS, but the federal government says that you need to collect a W-9 for every single non-employee you work with, regardless of whether you're going to issue a 1099 to them or not. So bear in mind that I hear that from people all the time. Well, I only collect it from, if they're incorporated, if they're a corporation, I don't collect one because we don't issue 1099s to corporations. Well, how do you know they're a corporation if you don't collect a W-9, the document that establishes whether they're a corporation or not? Weird. So make sure, that's a major practice, easy thing to be able to collect a W-9 every time you work with a new homeowner, a new vendor, a new contractor. Otherwise, fines can start at $60. The IRS kind of starts their penalties at $60 per instance. And then they go up above $600 for what they call intentional disregard. If you knew about something and you didn't do it anyways, the IRS calls that intentional disregard, and they like to put those fees up nice and high.
And
Right. So,
I'll just interject there, Gordon, real quick. From an owner perspective, owners are, really have to make sure we're issuing them W-9. Usually there's a lot of money going out to owners. And certainly, having a process that when you onboard that owner, you're getting that W-9 up front. So you know exactly whether or not you have to give them a 1099. A lot of them you're going to have to. And then also, just, ignore the fines for a minute, even without the fines, right? Just the pain of having to track down those W-9s at the end of the year can just, you're in a scramble at the end of the year trying to get this all done. The last thing that you want to do is be trying to figure out who you need to send 1099 for and or collecting their information so that you're prepared to do it. So we highly recommend having a process up front to collect that, certainly from homeowners and ideally even from vendors. We have a policy. We don't pay vendors on behalf of our clients unless we have a W-9 collected from them. So it's like, hey, you won't get paid. And guess what? You'll get a W-9 real quick when you tell people they won't get paid.
yeah, great point. I've seen that's probably the most common way. I have seen some businesses that will do as the next kind of bullet point in the middle, says, hey, we've requested it, we don't have it. The IRS does say after you're not supposed to make payment without a W-9. The only circumstance in which you can is if you have requested the W-9 3 times and still don't have that. You can start making payment, but you are supposed to withhold 24%, which is the standard backup tax withholding rate that the IRS would charge should they not have the correct information. And so, if you want to make payment, withholding 24%, but remember, it's not just a mandate, it's a law. You're supposed to have a W-9 before payment is made. Just make that process. And I think, Jesse, you're spot on. When people want their money, they're gonna jump on board real quick.
Yeah, and that backup withholding, I've actually seen our property manager. We've seen Airbnb and or like Stride. Usually Airbnb, if they're not able to match your tax ID and they don't have a W-9 file on file for you, they'll start withholding from you and sending money to the IRS, which is a huge pain in the butt. But technically they're doing that because they're following the law. So yeah, a lot to think about here with why you want to collect those up front.
Yep. Yeah. I think the point here across this is the energy spent to collect a W-9 is minimal compared to the energy you could spend should you not have one and anything goes wrong. It is the catch-22 about working with 1099s out there. The IRS kind of says, hey, we're giving you the gift business. You won't have to pay the taxes on that money paid. But if anything goes wrong, we're blaming you. So, better to be proactive, take a little bit of energy on the front end, collect a W-9 from everybody, make sure that you aren't making payment. Otherwise, that 24% backup tax withholding can come into play. That is something that the IRS will assess to you if you cannot get them accurate W-9 information. And then making sure that when you gather W-9s, you're just being smart about storage. I mean, today we hear news stories, it feels like every other week on data breaches and hacks and all of that. And, in going into 2025 here, intelligent criminals aren't breaking into a location and going for the cash drawer for $150 in cash. They're going after credit card data and, the personal information with social security numbers and EINs and addresses and legal names, because there's a lot more, in it for them from a stealing identity standpoint. So making sure that you've got your W-9s in a smart location, that you are keeping these things, stored in a cloud, not in an email, not printed out in a binder necessarily, but, encrypted and in a good spot is key as well.
Yeah, and there's a lot of good places to store them. QuickBooks and Xero, or if you're using systems like Bill.com, they all have good, secure portals as well as on VRPlatform, we have our own secure portal and storage for W9s, and I know Avalara, you'll talk more about your system that assists in both collection and storage of those W9s. So a lot of different ways to store them, but probably, on a hard drive, and or like in a Google Drive, probably that's not the one that we would suggest. We do have a question in here, and I just want to say that we're going to get to it as far as like, hey, who do you send a 1099 NEC to, in kind of the amounts and the thresholds. So we're going to answer that question here in a bit.
Yep, absolutely. All right, so stick with me on a journey here. This is going to be a journey, but we wanted to outline kind of the reality and what the process of W-9, 1099, working with a new vendor, contractor, homeowner looks like if you're, from every step along the process. So step one, we need to grab that W-9 from every vendor, every new individual we're working with. We need to request that and have that from them before we make payment. I know this seems silly, but I'm sure, again, anybody who's worked in the world of W-9 has seen this more than once. Can I even read their handwriting? I was a high school teacher for over a decade before I became a 1099 person, and I've got terrible teacher handwriting. So I can't read my own handwriting half the time. I wouldn't expect somebody else to. And so we need to make sure we have a system in which we're gathering these, and it's on the updated version of a W9 that was just updated here in March of 2024. Needs to be on that newest version. Needs to be something that we can read so that we can make sure we translate that correctly. Now, as I think Jesse alluded to, TIN matching. We want to make sure that we get into the IRS website, we create an account, and that we do TIN matches, because nothing is worse than saying, I collected W-9, and then realizing that the data that was given on the W-9 does not match the IRS has in their database. And now, again, the IRS is coming to us months later saying, you've got two options. Either track down that vendor, that homeowner, that contractor, whoever it is, and get me the right W-9 information, or you pay the 24% standardized backup tax. I don't want to pay 24%, especially as that number of how much I paid out on that 1099 grows and grows and grows. 24% of a big number is a big number. But also, it can be tough to track somebody down and play phone tag to get them to figure this out, get the right information. So if we validate the TINs by TIN matching ahead of filing, we're in a much better spot. So we need to create that and get that done. If you catch errors along the way, now we need to go back to that vendor and request a new W-9 and go back to step one. We're revalidating, we're going through all this process. So even so far, just to get a W-9 that we trust can be a good amount of work. Obviously, as we just referenced, we want to store these in a central and secure location. It doesn't help if I'm looking for a W-9 and I've got them in 4 different spots. If I can't find it, I can't find it. That's going to cause trouble. Once I have all my W-9s, I'm going to have to figure out, do these W-9s, these individuals, these homeowners, these companies, do they meet the requirements to get a 1099, right? We kind of have 2 audits in place. We will talk about those further, but it's really around, are they incorporated? Are they the right tax classification to receive a 1099? And then did they meet the thresholds for how much money I would have had to have paid them throughout the year in order to meet those minimums to issue a 1099. So I got to go through and audit my books, and I got to audit the W-9 itself, right? On top of that, we're getting ready to file with the IRS, but every state has their own set of requirements. Some states are part of combined filing, some are not, some require withholding on NECs, but not miscellaneous. There's all kinds of rules state by state, so we need to do the research on every state that's applicable and make sure that we know exactly what we need to do to file in those states. Now we need to transpose the information from our W-9s to our 1099s so that we can be ready to file. And then we're going to file. Now we're going to go to the IRS themselves. Luckily for all of us who have ever experienced the FIRE system, which is the older system for submitting your 1099s electronically, that system is slowly but surely going to die and go away. The IRS system is coming up. Still not necessarily easy to use as a direct source, but you need to file with the IRS, and you need to go to each one of those states and file with the states that require it. You feel like you're done. I filed with the states. I filed with the IRS. Yes. we're good. We let the government know. You're not done. Because now those recipients of the 1099s, they need to be made aware of how much you paid them so that they can do the taxes and be able to submit to the IRS the amount that is owed on this. So you need to take those 1099s, copy B, that goes to recipients. You need to be able to print that out, stuff that, put a stamp on it, and mail those out by January 31st to each and every vendor, homeowner, person that you worked with so that they've got their copy. And if anything along the way goes wrong, we're going to have to deal with that. If we get return to sender mail because the address wasn't right, if we get a B notice, which is what we were referring to earlier when your tax ID number and name don't match the IRS database has, and they don't know who to charge the taxes to, you're going to get a B notice. So we need to go back, and now we have to start again some of this process over. So again, end to end, there's a lot of steps. It's a lot of pieces to manage. And that's why, again, there are 3 different companies here that are coming together to say there are tools out there that can make this easier and take some of these problems and considerations off your shoulders and help you with them. So let's dig in a little bit more to some of the challenges and best practices that can go along with some of this. Okay. Talked about this a little bit before, but when we look at a W-9, is it going to be reportable or not? Is this going to turn into a 1099? Well, that's this box 3. Box 3 of a W-9 is where an individual or a company is going to fill out what their tax classification is. Keep in mind that corporations don't receive 1099s. So our C Corps, our S Corps, and then our LLCs taxed as corporations. Just because you're an LLC, keep in mind, LLC does not stand for Limited Liability Corporation. It stands for company. LLC is more of a legal entity. The tax classification can be a partnership, a C Corp, an S Corp, or a sole proprietor or individual, which would become a disregarded entity. So, any of these C Corp, S Corps, or LLCs, taxes corps aren't going to get a 1099. So we need to audit this and keep track of all of that, so that we know whether we even need to issue a 1099 or not at year end.
I just want to focus on that real quick. So and make sure that everybody's clear, right? So an individual or a partnership or an LLC being taxed as a partnership, all of those would receive a 1099, right? The C Corp, the S Corp, or a trust or estate would not. Is that correct?
Yep.
Okay, got it.
Yep, absolutely. And again, we kind of said a best practice on that to avoid some of those issues and challenges. We'll collect a W-9 ahead of time. Verify the data as you onboard, because like Jesse said, we're interested at the point of onboarding, right? I'm trying to get you in as a client or to work with you for your services. You are interested in providing your services or starting to do work with me as a property manager. So that's where the interest level is the highest. Let's get all of this done now. Collect the W-9, make sure you can read what it says, do a TIN match right then before you've done payment, do address verification through the United States Postal Service or through a third party like an Avalara to be able to keep up with all of those things. And that way now you know that going forward before payment is made, you've got all of these challenges kind of remediated. You have the information in hand. Okay. Another challenge. How about the recipients themselves, right? I need a copy of my 1099. Can you get that to me? Or I lost my copy. Can you send me another one? What about the idea of I moved, I changed my name, I reincorporated since you collected a W-9 years ago? We've talked about bad handwriting. How about, some homeowners, if we're not on top of it, a homeowner not even putting together the idea of you needed a W-9 from me? Yeah, we did, right? So if you stay on top of these needs, or you have the solutions that allow you to easily collect changes or redistribute, it can make things a little bit easier for you. And a couple tips here as well. You are allowed to electronically send a 1099 at year end. So you can save yourself mailing costs. You can save yourself the potential liabilities of return to sender. But bear in mind, the IRS has very specific requirements that you must gain consent from the recipient before you do so. So if you don't have consent, you have to mail it. Can't just email it or make it available via an online portal. But if you do have consent, which again, when's the best time to get that? When you're onboarding them. You can send it electronically, but you must also have a means in which they can opt out. So there are specific instructions out there via the IRS. But you can, if you have the right tool in place, again, you can very easily save yourself a good amount of energy and time come delivery in January. We've already said this, but keep in mind you don't have to issue a 1099 to vendors that are incorporated. So again, our C corps, our S corps, our LLCs that are also taxed as corporations do not need a 1099, so don't have to worry about all of that. And Jesse hit this earlier, but just to reiterate, keeping in mind that we've got two main types of 1099s out there, the 1099 NEC or non-employee compensation and the 1099 miscellaneous. And those are going to go to different parties depending on who they are. So Jesse, if you want to jump in there.
Yeah, well, what's the question? I don't know if we talk about the threshold, the $600 threshold?
We have not talked about threshold.
Are we going to later?
Trying to see if it is in a slide here. I don't know that we will directly.
Okay. Yeah,
discuss.
So that was,
yeah, this might be a good time.
Yeah, it's good time. I thought we'd throw it in here because it does relate to the question that popped up. So the question that popped up is like, hey, I've got a 1099 or I've got a plumber. I paid them $10,000 to just do one job. Do I need to send them a 1099 NEC? So a plumber would be a contractor, so they would receive an NEC. And it doesn't matter if it's one payment or if it's 50 payments, so long as the amount that was paid for services to that contractor is more than $600, that plumber should receive a 1099 NEC from you. One thing that can get a little tricky is if you have and Gordon, you can jump in here if I'm misspeaking, but a lot of times there's differences. I might pay a plumber for $10,000 in service, but I might pay them $5,000 for materials. My understanding is, hey, I only have to report the $10,000 for service, not the $5,000 for materials, correct?
Yes, correct.
Gotcha. Great. We have a couple other questions. I thought we might actually she already found it. So she says, hey, never mind IRS verify 10. There are also systems out there that verify the 10. So for example, on VRPlatform with owners, as owners enter in their tax identification number, we on the back end go and verify that so that when it comes time to issue them a 1099, we know that it is a legitimate 10. Gordon and I believe Avalara does something similar, right, with your W-9 collection.
Yep. Yeah, absolutely. Our solution is gonna, allows for a live TIN match as a vendor or contractor onboards through our electronic W-9 tool, kicks back the results in that moment so that they can rectify or fix that, and then a W-9 is coming through already TIN match by the time it comes to the business owner.
Cool. One other question. We actually got two other questions. One I'm going to save for later because we'll go over it. But the type of corporations that don't require a 1099. All corporations do not require a 1099. It is if you are taxed as if you are a C corp or you're an S corp or you're taxed or an LLC taxed as a C corp or an S corp, those entities do not require a 1099.
Yep. Actually, I'll jump back really quick because I saw a lot of questions. So on the screen right now, again, it's C corps, S corps. If that box is checked, then they don't need a 1099. And then it will have the LLC. They check the box and then they have to write S, C, or P, C corp, S corp, or partnership. Considering I've been in this world for quite some time and I have never once encountered an LLC taxed as a C corp, I'm not really sure of a lot of tax advantageous situations that one makes sense for. I don't think you're going to run into that one. LLC taxes.
As a CPA, I will say you will, but it's rare. Usually it's someone that set up as an LLC and then at a later time decides, hey, there's some reasons that they want to be taxed as a C Corp for international tax purposes and stuff like that. So it'll come up, but rare, certainly rare.
Very rare. S Corp will come up, but again, if you see a C or an S on this line, then that also would mean no 1099. Now, again, one area that we do see issue all the time, that's why there is extra instruction here, is the single member LLC, the LLC taxed as a sole proprietor individual, which does make up a very large amount of LLCs in the US. They will try to say that they're an LLC on here, but again, for tax purposes, they're probably submitting the taxes for these transactions on their own taxes under their own name. And so it really always ties back to whatever name goes on line 1, which is where are you going to report these taxes, is what you should be marking here and what the tax ID is. So we will see that all the time. But if you do find that an LLC that is, they say, well, I'm an LLC, but I'm not a C Corp, I'm not an S Corp, I'm not a partnership, I'm just an LLC as me. Well, then they probably need a 1099 too. They should probably be marking that they're an individual sole proprietor, or it says single member LLC, what's called a disregarded entity, and we would submit it as well. So just keep in mind, if we know it's a C Corp, an S Corp, or a C or S on this line, that's who wouldn't get one. Everybody else should be getting one.
Great. Thanks.
Back forward. Awesome. I think this is also, Jesse, something we're going to talk about, the 1099 miscellaneous specifically.
Yeah, this one, to be honest, is probably one of the most misconstrued and understood issues as far as what's the number. So I'll just go back to the fact that, hey, owners that are not C Corps or S corporations will require a 1099 MISC, because on a 1099 MISC is the form that you report rents, right? So rents are not reported on an NEC, which is NEC is really intended for contractors. So the 1099 MISC has a box 1, which is rents. And so this is the box that you will report to owners the revenue that you've collected on their behalf and paid out to those owners. Now, again, it's a real important issue because typically, right, like if we just look at this kind of owner statement summary that I have up above, we have total revenue that was collected of approximately $158,000. And then we have deductions for management fees and housekeeping supplies and other host fees that get us to the $106,000. And so assuming that we've paid out this owner all of the net owner revenue for the year, they've received $106,000. But then what is the number that goes into box 1? Is it 157 or the 158,000, or is it the 106,824? The IRS regulations are actually really, really clear. They state that the amounts reported in box 1 of rents should be before deducting any commissions, fees, expenses, etc. So that means that, hey, you should be reporting $157,893 in box 1 and not $106,824. Now, I will tell you that this is contentious. I've had many of owners that, call me and they are mad. They are so upset that we have reported $158,000 instead of $107,000. And they think that I'm, I've been accused of tax fraud and all kinds of weird stuff. But I just kindly explained to them that the regulations are just very clear on this matter. And what this is intended to do is that they would report $158,000. And so as a property manager, it's important that you are providing them the $158,000, but also providing them a year-end statement that shows, hey, you had total revenue of 158,000, but we withheld 36,000 for management commissions, $8,000 for housekeeping fees, $6,000 for OTA fees. And so those would be deductions on their actual tax return to arrive at the $106,000-$107,000 of taxable income. Again, people misconstrue this. We have clients that say, I don't care, I'm going to bear the risk, and I want to report $107,000 instead, because that's what my owners expect. And I say, okay, will you please send me an email, acknowledging that you've been advised otherwise, and we produce them a 1099 for $107,000. And so, but again, our goal here is to inform you, and so that you can know, hey, what the law says, what the regulations say, and then you, along with your tax advisors, make the appropriate decision on, hey, what you report on box 1 and how you report it. So anyways, I wanted to bring that up because people always question me on it, and people can get confused, but that is what the regulations require. I want to go look at our questions here. So hopefully that answered the question. Okay, looks like submit 10. We'll go over about submitting for a 10 matching. How does a 1099 MISC relate to a 1099K if I'm using a rent collection software that issues me a 1099K? So decent question. I'll take this, Gordon. Based on my understanding, you can fill in or correct me if I misunderstand. 1099Ks are typically issued by people who are merchants of record. So like a payment gateway, Stripe, Airbnb is also a payment gateway. And so those providers are required to issue the 1099K as a payment processor, so to speak. The money that they have collected or basically processed and paid out to you. And so again, that's coming from, typically you're going to be getting a 1099K from Airbnb, Stripe, Marriott, or Booking.com if they are the merchant of record and paying you out on those reservations. So, but effectively, it's kind of a similar deal, right? That the 1099K is telling the IRS, like, basically, hey, we have collected essentially this revenue for this property manager, for this company, and so they're kind of declaring this revenue that was sent to you. You, on the other hand, from the 1099 MISC perspective, is basically declaring, hey, yeah, I received 1099K and all this revenue from Stripe, Airbnb, et cetera. But the 1099 MISC is you declaring, hey, a bunch of that was rents that was for another company that I collected the money on behalf of, essentially, right? So that's a lot of what kind of those different forms are doing, and how they work and who they come from. Gordon, that you can feel free to add on.
I think you hit it pretty spot on.
Great.
Yep.
So I have a question here. I think it's related to this, so I want to try to answer it here. We as the PM report the cleaning fees, et cetera, as our revenue and our expense. Report gross rent before management commission as owner, box 1, and then give them a P&L so they can deduct property specific expenses like maintenance and management commissions. Thoughts? So yeah, so that it's a really, really good point. So a lot of times, if I was to look at this statement here, I might actually be collecting $149,000, or I collected $158,000, let's say. That was the total revenue I received from the guest. But the $9,000, that was housekeeping revenue that was mine as the property manager. I kept that. I never reported it to the owner. That was my cleaning revenue. And so the only thing that the owner ever sees is the $848,827, right? So the 149,000. In that event, Jasmine, to answer your question, what we have done, or what we typically do with our clients, and there's not a lot of real good clear guidance on this, but we take the stance that the $149,000 is what was collected and reported to the owner. Therefore, that is what we report in box 1. And so because the $9,000 is your revenue, that is not something that you would report in box 1 to the owner, because then it gets real confusing where there's a disconnect between your year-end, your owner statements and or your year-end summary statements and your box 1. So we really always want owners to be able to make that connection. So hopefully that answers your question. But you would report before management commissions are subtracted, as well, before any maintenance fees, et cetera, are subtracted. So you might have those expenses, but you would still report the 149,000, and then report to them all the maintenance and management commissions that were deducted throughout the year, so that they can deduct that on their owner statement. So anyway, touchy subject. Hopefully I've touched on all of them. I've seen a couple more come in, but let's keep going. And then if I see them, I'll answer them here in a bit.
Great. This is pretty basic, but again, just making sure people know the challenge of the IRS deadlines, that in all 1099 cases here, you do need to have it postmarked, out to the recipients by January 31st. The paper mail file timeline for an NEC and miscellaneous are a little bit different. I think most cases we try to push the concept or the idea to most people, e-filing is the way to go. If you can stay away from the paper side, e-filing is definitely the way to go. And so again, if you're a 1099 NEC, you need to have that to the IRS by January 31st. If it's a miscellaneous, it's March 31st. So, you gotta keep track of all that. I think most people would say, hey, I need to get this all out to the recipients by January 31st. I'm going to file by the 31st for all kinds of these as well, because I'm going to do it all in kind of one go together. Makes the most sense in that way. But just know, the month of January, and that's why, the pro tip there, collect the W-9s, do the data validation on those individual recipients when you onboard. That way you don't have to worry about the individuals when you get to January. You just have to kind of audit your numbers and add those to the 1099, and it makes it a lot quicker, a lot easier to be able to file and get this all done in such a short time frame. All right, follow some basic steps here throughout the process, as we talked about. We want to make sure that we collect and or update W-9 information for all of our recipients. We want to calculate how much was paid to each vendor. Again, some of that, what Jesse was just going through with those, what do we deduct and what do we add in? Calculate the gross rents for each owner and any expenses or fees withheld. And then translate that data over to a 1099 NEC for our vendors. Remember, NEC, non-employee compensation. Think work done, services provided, versus a miscellaneous. That's going to be, we're filling that in on, this is something that is not for work done. It's, payment for a home. That fills into kind of a miscellaneous, not a employee compensation side of things. We want to make sure that we deliver these 1099s out to recipients, again, postmarked by January 31st, or e-deliver them, have them emailed out or available by January 31st, and then filing the 1099s with the IRS and the states by the appropriate deadlines, right? So this is kind of our step-by-step where we need to go, what we need to do.
So I'm gonna interject real quick. There's two other questions kind of related to these things. One is, they said, hey, I reported net going back to my example that I was showing earlier, they reported net in 2023. And their question is, hey, should I somehow file a corrected statement for 2023 or just move on to 2024 and file gross in 2024? Yeah, I mean, look, if you want my opinion, you know, 2023, that filing period is behind you. It should be behind your owner. They've already reported their taxes, so it would become really, really confusing at this point to file a corrected 1099 at this point. So, my suggestion is move forward in 2024 and file gross correctly. What is going to be important though, hey, is that you're communicating to your owners, hey, we're filing this as a gross amount this year. This is why, per the IRS, that's what's required. And so, it is appropriate for you to take these other deductions or these management commissions and other expenses as deductions on your tax return, but we're not deducting them before we, arrive at your number that goes in the box 1 of the 1099. So hopefully that clears that up. I know that's a little bit of a weird situation. Hey, you filed it incorrectly before. Again, my opinion is you look prospectively. The other one is just a quick question. They said, hey, we collect rents from a payment processor, and we remit to the owner, and they say, hey, do I file a 1099 MISC for them, or only if the checks are being written in the owner's name? No. If you are receiving money from a payment processor or even checks you're depositing in your banks, that money that you received is the money that you need to report in the 1099 MISC. So hopefully that answers that question.
Yeah. Yep. Great. And bear in mind, what name or who money is being issued to throughout the year, whatever name goes on that check or that payment, may have nothing to do with whether a 1099, like the name on that may just be a DBA or an individual's name, but where that money, if they're filing that money and saying, hey, that has to do with this business or this individual, well, that's the legal information that we would need to file a 1099 for. So again, bear in mind, you kind of separate the idea of the legal business name and entity that we are filing 1099 to and where that money is being reported versus just because you write a name on a check doesn't necessarily mean the check's not being deposited into that business. So we want to always kind of connect the dot of the W-9 and the 1099 and the entity that's associated, not necessarily just what name goes onto a check. Okay, so on to the last piece of it here. Tips to surviving, thriving, taking 2025 and beyond on here from a 1099 perspective. How are all of our solutions set up to help? Well, from a 1099 W-9 perspective, we already talked about this, how complex it is to deal with all this on your own. I've seen a lot of people sending messages in or questions around, how do I get my tin check thing set up on the IRS? You don't. If I'm you, I would tell you, if you don't have to go to IRS.gov and do something yourself, don't. It is not the most user-friendly place on earth to be able to have to do stuff. Use a software or a solution that's already done it for you. So how can Avalara help in all of this? Well, Avalara can take you from W-9 to 1099. We have a W-9, electronic W-9 request form that allows for auto validation of TINs as a vendor or an individual onboards. While they're onboarding in the background, we also gain consent for e-delivery as we do that. We store all of this and have all of our security protocols, certified in lots of different ways. And so we'll keep track of everything in our system for you. And then it will automatically push the W-9 information onto a 1099 so that you can e-file with the IRS and the states. We'll also do another TIN match and an address verification to make sure we're sending these off to the right places and that we are filing these correctly. We automate flagging the states that need a 1099 and handle that for you. And then we also can e-deliver or postal mail all of this, on time so you can make sure you are covered across all of the timelines and all of the deadlines there. So again, really from start to finish, W-9 collection, validation, 1099 filing. Our solution can help you all along the way, even from a multi-client type scenario.
Great. And yeah, I'll take over from here and just talk about VRPlatform and how, we assist. Obviously, as I talked about earlier, our platform both integrates with your property management system and pushes data to, QuickBooks Xero, Sage Intacct, and or pulls that data into VRPlatform and produces your owner statements. And so part of that process, owners can opt in, provide their W-9 information, effectively fill out an electronic W-9 and provide their 10 information. And so at the end of the year with our platform, you're producing both a year-end summary statement and then also producing e-filing. So once that is reviewed and approved, we actually create essentially like a draft statement to the owner, because sometimes there can be questions or changes, etc. So they'll be able to review it, see it, and then effectively, just with the click of a button, you can e-file that with the IRS. We do not mail 1099s from our platform, so it would only be if that owner has opted into receiving electronic 1099s that they would receive that 1099 within our secure owner statement portal. Let's jump to Ximplifi. And so if we just talk about Ximplifi, Ximplifi, we are a service provider, right? I say we, I don't work within Ximplifi on a full-time basis anymore, but Ximplifi is a service provider. So all the tools, everything that we've talked about today, we actually, we're doing all the accounting typically, from reconciled bank accounts, credit cards, paying vendors, et cetera. And so when it's specific to the 1099, whether it's an NEC or MISC, we're helping you manage the collection of the W-9, collecting it within typically the accounting software and keeping that there. We're then also helping you, not paying vendors until we make sure that we have them, and or we do what we call kind of W-9 audits throughout the year, just to make sure, hey, we didn't have things that were somehow missed during onboarding of either an owner or a vendor. And then at the end of the year, we are assisting in preparing those year-end statements that go to owners, filing the 1099 and or filing those 1099 NECs to any of those vendors that you've, that qualify for needing a 1099 and also, have reached the $600 threshold for services where that 1099 NEC needs to be filed. So hopefully that kind of summarize how all of us can help you. Regardless, it can be a complicated, tedious process, and hopefully you learned a little bit more about the requirements as well as, how we can help you. And I'm sure you might still have questions, so reach out to any of us. I think we've answered all of our questions. And so, yeah, reach out to any of us. We're happy to help in any way that we can, either with this and or, sales tax or general accounting service and or short-term rental accounting software. Everybody has a Merry Christmas, Happy New Year, Happy Holidays. Take care. Thanks, Judy. Thanks, Gordon. Great job, Brit. Talk soon. All right.
Thanks, everyone.
See ya. It's been great.
Thanks, everyone. Bye now.
Bye-bye.